Welcome to a special New Year's edition of Barron's Roundtable. I'm Jack Otter. 2023 has been a volatile year for investors in the economy. Inflation's been falling, but it's still above the Fed's 2% target. Interest rates are above 5%, but rate cuts are expected in the new year. And stocks are rallying while the bond market got hammered, then turned around recently. This week, we'll look back on the year that was and tell you how to best position yourself for the year ahead. First, each of our panelists has an investment idea that they're glad they shared this year and one they wish they'd flat out avoided. We'll tell you what they were. Then, investment strategist Meb Faber will tell us where he's seeing opportunity heading into the new year. Later, the Roundtable will also offer some promising 2024 investment ideas to consider. And finally, we're taking a look into the crystal ball with our predictions about what's next for the economy, the highly anticipated presidential election, and more. On the Barron's Roundtable, my colleagues Ben Levison, Carlton English, and Al Root. So, Al, as you well know, Barron's does something a little unusual in the world of financial journalism. We publish a scorecard every year, the good, the bad, and the ugly of our stock picks. So with that spirit, let's talk about a few things we did well and not so well on this show. If you could take one idea back from 2023, what would that be?
We wrote a space cover in May, Adam Clark, my colleague Adam Clark and I, and we recommended some shares of startup stocks. Two of them, Rocket Lab USA, it's kind of like a mini SpaceX, and then Planet Labs, it has an Earth imaging business. Rocket Lab rose 13%, trailed the S&P by about 4 percentage points. Planet Labs fell 42% though. So in my eagerness to invest in cool things, we may not have recommended the best stocks in a rising interest rate environment.
Another mantra on Wall Street is never try to catch a falling knife. You did so with Tesla and you caught it.
Yeah, so, well, it is interesting, falling knife, right? In 2022, Tesla stock was down. Tesla stock has really only fallen twice out of its entire history since 2010 IPO. And it is a leader in electric vehicles. It's so hard to sometimes separate Elon and what's going on at Twitter and things like that from Tesla, the stock. But that's basically what we did. We tried to buy peak fear about price cuts, about Twitter impact on the car company. And at $100 in early January, we said, this is a good buy. We wanted, $150, $175. Of course, now it's $250 because Tesla never does what you think it'll do. So we were happy with that. Did better than we expected. But when fear is at its maximum point, we like it.
Blood in the streets. Real quick, so what do you do now at 250?
So I am not, and never will be sort of a Tesla shorter. It is a leading company in a growing segment of an exciting business. Right? So it's expensive. There's various ways. You can not like it or like it. I'm more of a market weight Tesla. It's 2% of the S&P. Keep a little Tesla. If you love it, a little more. If you don't like Elon, a little less.
All righty. It'll be fascinating to see what happens with Twitter in 2024. That debt is trading at probably 40 cents to the dollar. We'll see who buys it. Carlton, if you could take a mulligan for 2023, what would it be?
First, tell me what a mulligan is, because I don't do sports, but I'm going to guess that it is going to be PayPal. The stock has looked cheap. I've looked at it a lot over the last 2 years, and guess what? It keeps getting cheaper, now trading around 11 times earnings. And this is one that I kept thinking that the turnaround would happen faster, was off the mark there. Shares were down about 11% going into mid-December. And I think the outlook for the stock now is they've initiated a lot of changes. There's a new CEO. They did a buyback program. They're really trying to right the ship. But PayPal is not going to be that company that it was in 2021 when everyone was doing e-commerce. They have a valuation that looks more like a bank than a high-flying fintech. Probably can get a valuation a little bit higher, but not much.
Meanwhile, your bullishness on athletic wear was rewarded.
Yes, Lululemon. Now, Lulu belongs in a handful of stocks that I say you really shouldn't bet against for too long. And this would include like a Nike and a Netflix. Every once in a while with Lulu, you're going to get a bad earnings report, a bad, quarter, something like that. The market's going to overreact. And then, they're just going to soar from there. Lululemon shares up about 60% on the year. It is a retailer. They just sell yoga pants, but it's always going to look expensive as a retailer, but still it's a company that's been ahead of most of the trends, so it's one that I would always be bullish on.
So look for a dip if you don't own it now.
Look for a dip, yes, yes.
Ben, what's your 2023 regret?
Coming into this year, way too bearish. I mean, the stock market got hammered in 2022. I thought it would get hit again in 2023. I was sort of looking back at the dot-com bubble and thinking, you know what, it's going to be the same kind of thing. And it wasn't. I mean, I missed a great buying opportunity. You had a few months there at the end of 2022 into 2023 when you could have just bought up the stock market and all these stocks, and I missed it.
But you are not a perma bear. You saw the error in your ways.
Thankfully, I'm not a perma bear. No, I did, and Barron's. We recognized we were too bearish, and we went bullish in June, and so we missed some of the upside, but we didn't miss all of it. We had a nice return from that story, and I think of what Jack Howe always said is that the market usually goes up, and so you shouldn't be too bearish for too long unless you really expect something like the financial crisis.
When in doubt, bet up.
Yep.